Hello A+ traders, welcome again to this YouTube channel. In this third module of the Forex beginners course, we are going to look at how to identify healthy market trends. We are going to look at channel trading strategy. It's a simple strategy I'm going to share with you, and you can use them to trade any financial market, either Forex market, the binary options, or crypto. How do we call the other one? I skipped my brain. Equities, yeah. Alright, on this particular model, we are going to learn what is a trend, the types of trend, and we're going to how to identify healthy trends. We are going to also learn how to use trend lines for channel trading. But before we jump into the lessons, I want you to subscribe to this channel. Don't forget to click the subscribe button, so anytime we at A+ Trading Hub update a new tutorial or video, you get notified and you don't miss out of. What is a trend? Trend is the direction of the market. It's that simple. A trend is the direction of the market. So these other lessons will be very simple. So we have three types of trend. We have the uptrend, which is also called the bullish trend. We have the downtrend, which is also called the bearish trend, and we have the ranging trend, which is also called sideways. So when price is moving in a sideways manner, that is called a ranging trend. So don't forget, we have three types of trend: the uptrend, the downtrend, and the ranging trend. Now, what are trend lines? As the name implies, trend lines are levels used in technical analysis that can be drawn along a trend to represent either support or resistance, depending on the direction of the trend. So we look at them as a diagonal equivalent of horizontal support and resistance. So if the trend line is below, that is a support zone. If the trend line is above, that is a resistance zone. So these trend lines can help us identify potential areas of increased supply and demand, which can cause the market to move up or down respectively. In the next lesson, you are going to see how we are going to use these trend lines to spot buying opportunities and selling opportunities in the market. But first of all, let's look at how we can identify an uptrend. To identify an uptrend, you need to see a series of higher highs and higher lows. Remember, in the previous model we talked about market swings, that we have swing highs and lows. On this chart now, this is a swing high, this is a swing low, this is a swing high here, and this is a swing low here. So we use these swing highs and low to identify a trend too. But to identify an uptrend, you need to see a series of swing highs and swing lows. So here we have a trend, because we have identified this HS you see here stands for higher highs. So right now you can see I've identified a series of higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. So since we have seen a clear higher highs and higher lows, we can say this is an uptrend. This is an uptrend here. So price keeps going up. So if you are buying, anytime price retests the trend line here, that is when you look for buying opportunities. They say the trend is your friend, so you need to trade along with the trend. So anytime you spot an uptrend, you only look for buying opportunities. So you keep buying once the price retests your trend line. So that is how you identify an uptrend. So let's look at how we can identify a downtrend. To identify a downtrend, you need to see a series of lower highs and lower lows. So like on this chart now, price is pushing on a downtrend, and I can say this is a downtrend too, because I've seen a series of lower highs and lower lows, lower highs and lower lows, lower highs here and lower lows here. Since we have seen this series of swing highs and lows, so we say this is a downtrend. I've tried to draw this one a little bit straight. I'm not good at drawing. So this is our downtrend. We have identified a downtrend. So according to the rule that you need to trade along with the trend. So anytime you see price retesting this your trend line, that is when you look for selling opportunities while you place your stop loss away from it and you'll take profit at the next level there. So this is how you identify a downtrend. When you look at your charts, look at this swing highs and lows. For uptrend is higher highs and higher lows. For downtrend is lower highs and lower lows. Okay, so it's sometimes it's very easy to spot a trend when the markets have already moved, like I've completed the whole trend movement. This particular lesson is going to show you how you can spot this trend line and you join them on time. So what you need to see on the chart, you need to see just the first 2 points. Once you see the first 2 points, you can easily plot your trend line from there. Now on this chart here, price was on a downtrend, as we can see. It was on a downtrend and find support over here. So you see price find support over here and pushed up, came down again, but was unable to break through the previous the first point, the level of the first point, and went back up again. Once you see this, that means you have seen a new trend. So when you see the first and second point, you can start plotting your trend line, and all you need to do is wait for price to come retest the trend line. Once it retest the trend line, you buy. You retest the trend line again, you buy. So all you need to do is just look at for the first 2 points. When you see the first 2 points, that means you have caught the trend on time. Keys to plotting effective trend lines. So when you come to the chart, you need to zoom out and focus on the higher time frames. Don't cut the candlestick bodies. Include the candlestick wicks. You can see from here, I'm including the candlestick wicks. These are the candlestick wicks here, and I'm including them as I'm drawing the trend line. You don't cut the candlestick body. You don't do this. No, that is wrong. So you include the candlestick wicks and don't cut through the bodies. Do this on the higher time frames like the 4-hour, daily, and the weekly. If you go to the monthly, that means maybe you're a position trader. Then never force a trend line to fit. If you see a trend line is not fitting perfectly well, don't force it. What we had here, you see it was somehow, it was not that straight, so you don't force it to fit, like doing this, trying to do this. Yeah, trying to do this. No, you don't force it to fit. Just leave it there. Any point that doesn't touch clearly, you leave it. So don't force your trend line to fit. Let's look at how to trade a bullish trend. When you see a bullish trend, remember all you need is the first 2 points. You need to identify the first 2 points. So when you identify these first 2 points, when price retests the trend line again, that is when you take a trade. Like on this chart here, this was our first point here, and we can take this as a second point, and this is the third point. Price retested this level, then you take a sell, sorry, you take a buy from here. So when you buy from here, your stop loss will be few pips below the signal candle. So here we have a hammer, a candlestick formation, the hammer. So this is a hammer, so your stop loss will be below here, like 50 pips away from that signal candle here, and your take profit will be up here, that is at the previous swing high. So the previous swing high was here, so your take profit will be at this level and your stop loss will be here. Then you take your trade. Entry will be when that signal candle close. So you see you have had your trade there. So that is how you trade a bullish trade. So once price comes and tests the trend line again, you can keep adding to your positions and make sure you are reducing your risks. Also, you are managing your trade properly. Like here we had a candlestick formation here on the trend line, then price rallied. You wait for price to approach your trend line. You look out for rejections or bullish candlestick formations, then you take your buy entry, place your stop loss few pips away from the signal candle, then take profit at the previous swing high. So that is how you trade the bullish trend. Though in the price action course, I've explained in-depthly on how you can fine-tune your entries and exits when trading with the trend. So if you want to learn more about price action, so click the link below this video. There's a link below this video, so click there, then you get to learn more about price action. So let's look at how you can trade a bearish trend. So this is a bearish trend. Also, it's the opposite way of trading the bullish trend. So you need to first identify the first and second points. When you do that, once price keep retesting the trend line, you take your entry and your stop loss should be away from the signal candle. Then your take profit will be at the previous swing low. You know, we have series of swing lows here. This is a swing low, this is a swing low, this is a swing low. So your take profit will be at the previous swing low. So that is how you trade a bearish trend. It is also hard for traders to identify an healthy trend. What I just put up here is how you can easily identify an healthy trend. For example, this is your chart and we have this trend here. This is an uptrend and price pushed up, and it took like 7 days for price to retest the trend line again. After that, price pushed up again, and it took 14 days for price to come back and touch the trend line. Again, it rallied up. After 21 days, that is when it retested that trend line. Price rallied up again, and it took 28 days for price to retest the trend line again. So when you see price moving like this, that shows that this is an healthy trend, that this is a very good trend. When you see price pushed up and breaks above the previous swings, like in this case now, this is an uptrend, it broke above the previous swing high, keeps breaking above the previous swing high, you know, keeps breaking above the previous swing high very well. It breaks up very well, and it takes a longer duration than the previous before retesting the trend line. This is an healthy trend. So when you see this kind of trend, just be rest assured that price will keep pushing up. The same is for the bearish trend. When you see price takes a long period of time before retesting the trend line, that is an healthy trend. That is the kind of trend you need to jump in and trade, because it gives you more opportunity for you to make more money. You know, let's say for example, this was the first 2 points you identified, and price came back and retest the third time, and you joined this trend. This is good money for you. Then came back again, and this is another opportunity for you to make good money. Longer times it takes for you to retest the trend line, the more healthy the trend. So don't forget that the longer time price takes to retest the trend line, the more healthy the trend. So let's also look at how we can spot a trend that will reverse very soon. Now look at this other illustration here. Instead of price taking time before retesting the trend line, rather it doesn't take much time. First one took 21 days before price retested the trend line. The second one 14 days. So you see the period of time price takes to retest the trend line is reducing. So when you see this and you see price testing the trend line very often, just know that price may break the trend line very soon, and we may have a change of trend. So once you see price testing the trend line very often, just know that very soon price will break through the trend. So that is how you spot a trend line break. So you don't just say price will break this trend line soon. You need to observe those price actions on the trend line. So when the period of time price is using to retest is the trend line is small and it's testing very often, just know the trend line is going to break soon. So we're going to see a change of trend. So this is how you spot a change of trend. This was a downtrend. As you can see clearly, we had series of lower highs and lower lows. So this was a downtrend. First, you need to watch out for the breakout. This was a breakout here. Price broke out of the trend line and we had a retest. So this retest here is where we have a buy opportunities to join the new emerging trend. So price was moving on the downtrend and we can see bullish impulse here and broke through the trend line and we had a retest here. So you can see from that retest we had a bullish engulfing candlestick formation here. That is a signal to buy. So you buy at candle close here and your stop loss will be at least 50 pips away. This is your stop loss here and here is your entry, the close of that candle, and your take profit will be above the previous swing high, which was here. So your take profit will be here, and you can see price have reached the take profit point and is still pushing up. So that is how you spot a change of trend. Once you see price break the trend line and retest the trend line again, just know that the trend have changed. So we are going to see a new trend. So let's look at how this channel strategy looks like. All you need for these channel strategies are just your trend lines. So first, let's say you see on this chart now, this was an uptrend. You identify the first 3 points. So this is the first point here, this is the second touch point here, and this is the third point here. So when you see a swing like this, price moving in a downtrend, and we have the first rally, pull back, and the pullback didn't go below the first U-turn, pushed up again. Now you have seen an emerging trend. So you draw your two trend lines like this. So all you'll be looking at for, anytime price touches your trend line support, the trend line below your trend line support, you look for buying opportunity. When it goes up and touch your trend line resistance, you look for selling opportunities. So that is the channel trading strategy. It's very simple. So for example, now price pushed up and reached the trend line resistance, and you can see we had an inverted hammer there. That is a bearish candlestick formation. So you sell a candle close here like this, you sell here, and your stop loss will be at least 50 pips away from the signal candle, and your take profit should be at the other end of the trend line. So when price push down and reaches here, you close your sell entry and take a buy and push up. When it reaches the other end of the trend line, you close your buy entry, look for selling opportunity, sell down. So that is channel trading strategy. It's very simple, and it's just for you to identify the first 3 touches, then plot your trend line, then watch out for those price rejections and price actions on the trend lines, then you take your entry. So I have few quiz for you here, but before we look at this quiz now, if you want to learn more about price action trading, there is a link below this video. Just click on it, and from there you get to learn more about price action. So for the quiz I have for you, I want you to answer this quiz on the comments section of this video, and I want you to tell me what is a trend, and I want you to tell me how many points do you need to start plotting your trend line, and I also want you to identify a bullish or bearish trend on the chart. You identify this on the chart, screenshot it, then come and post it on the comment section. Then also tell me what is channel trading. How do you understand channel trading? You know, these are the few questions I want you to answer, and if you should answer these questions, it's going to be very helpful for you. At least this will show that okay, you are understanding, you are following up this, and you understand how to draw, plot trend lines and identify a trend. And don't forget, if you want to learn more about price action, click on the link below this video, and you can follow us on our social media handles, that is it, at A+ Trading Hub, Facebook, Instagram, Twitter, and also don't forget to subscribe to this channel and click on the notification bell if you want to talk to me directly. My name is Anibita, the lead coach of A+ Trading Hub. So you can WhatsApp me, talk to me directly on WhatsApp with 0703 9335695. Don't forget to subscribe to this channel. If this video was helpful for you, like the video, and as well, if this video was not helpful for you, dislike the video, give me a thumbs down, but also comment your reasons why this video was not helpful for you, so I can come and see what I can do to help you. And thank you.